please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Asian markets, they are trading in the green on the back of strong gains that we saw on Wall Street overnight.
There are 3 Ds which have always been a concern, which I think are going to come back into focus. And for me, those 3 Ds basically are demographics, deglobalization, and debt.
Big growth driver this time around is expected to be the petchem business.
For the overall market, over a medium term, IT really is the leader now.
Sources share with CNBC TV18 that PNB MetLife has filed its draft IPO papers with the insurance regulator IRDA.
We continue to have a healthy capital position. We have some portion of the capital which will come through the warrants.
10,655 is where, 54.55 is where the first tick was.
They will be raising 5,000 crores through a combination of a fresh issue and an OFS.
I think we've seen a very strong, Q4, which is a good note to end the fiscal year on.
Markets are at the day's highest point, 84 points up.
Phenomenal day for the markets today, especially on the bank Nifty. The Nifty has slipped a bit after those Maruti numbers and the market's reaction more importantly. But overall, it's been a very strong follow-through to markets yesterday's big move. This is Closing Bell. I'm Anuj with me. Surabhi. Hi, Surabhi. Good afternoon.
Good afternoon, Anuj. What a turnaround by the banks, right? I mean, it's completely overshadowed that disappointment that we've had from Maruti. That is, of course, the weakest stock right now in terms of just the way we've seen the decline come through. Still reeling under pressure. But the Nifty Bank, its constituents, in fact, let's just pull up some of the names. SBI, ICICI Bank, they're even Axis for that matter, they're slightly off the highest point. But nonetheless, we are talking some very, very solid gains on these ones. Anuj, the question is whether this is a flash in the pan. The cynics will always say that is this just a day trade phenomena, so to speak, or is something materially changing now for the market?
3 or 4 points. First up, after an expiry like yesterday, and we discussed it today morning that there are some gap ups that you chase and there are some that you avoid. Today was a gap up that was worth chasing on the bank Nifty, Surabhi. So so that's point number 1. Because it's the first day of new series, there's no baggage, and the market's put behind a good series. Second point, it's a long series, and first day normally if you have this kind of rally, you should not take it as a trend decider for the overall series. That point is point number 2. And point number 3, it's remarkable that on these earnings, Axis Bank is up 10%, and on earnings from Maruti, the stock is actually down 3%. That also tells you a bit about market positioning. The impact. Axis had corrected from 530 to 490. Essentially, what you saw today was a lot of shorts just getting trapped on Maruti. You would have taken, assumption is people would have taken long positions ahead of the event, and minor miss or a bit of a miss from the estimate, and the stock is doing what it's doing. Maruti, that is that we're talking about. So that's of course a bit about the overall market move. But today is a trend day on the bank Nifty. The banks are the ones which are really, surging. And on days like today, you normally end at the highest point on the bank Nifty. So perhaps some bit of it is left for last hour as well. But Monday onwards, I think you'll have to come and take a fresh card because this is just an accentuation of the move that we saw yesterday. Before we invite our guests, just want to point out a couple of stocks. So once again, PC Jeweler is now down 12%. This is after the big move that had already happened, and then that stock in a strong market is making lows of the day. And the other is SRF. Just pull out the intraday chart of that stock. That's making highs of the day right now. This particular space has done well, and yesterday also the stock had rallied, and now moving towards the high point of the day. How should you position yourself in trade? For last hour, we have Prakash Gaba, and of course in a bit Sudarshan Sukhani will also join us. Prakash, good afternoon. So your thoughts on the market action, and what are your stock calls now?
Beautiful move, Anuj, beautiful move. After this kind of a move, it tells me that there is an upside. We could see some sideways corrections also, but I would say 10,600 seems to be a strong support zone. If we get dips, those will be buying opportunities. Only thing is we need to see a slightly longer term time frame for next week, and I feel that we can see levels closer to 10,814 to 10,910. In the short term, I feel that we could be closing in the highs today, closer to the highs today.
Okay, stock calls?
2 stocks. I like Apollo Tyres. That looks good. Seen a good up move. It can continue its journey up. Target on the upside is 297. Stop below 290. And I also like Century Textile. Can climb to levels closer to 1270 zones. Stop below 1240.
Okay. Well, let's also welcome in Sudarshan Sukhani. Good afternoon, Sudarshan. So this run to 10,700, you know, how convincing does today's breakout look to you?
Well, it certainly looks convincing. I mean, you can't have a more conviction than this. The markets have clearly and resoundingly said that the 10-day narrow range was eventually going to move on the upside. The targets that we can see for this move at the very least is about 10,800. And then you know what targets are. Sometimes they can be exceeded very easily, especially when we are with the trend. So with that in mind, traders should be long in the Nifty since today morning and in the Nifty Bank in both the indices. And stay with it. Your stops can easily move to 10,610 now. And just keep that 80-90 point stop so that you have enough margin for some minor fluctuations. Go into next week and we'll see what happens.
Okay, fair point. SP Tulsian of sptulsian.com and Sudeep Bandyopadhyay also with us. Good afternoon. Mr. Tulsian, your thoughts first on Maruti. I'm reading a couple of brokerages' first prints and of course there is a bit of a disappointment that most are reckoning about the margins. But your thoughts on the numbers and your call on the stock?
See, if you see in Q4, they have provided for an interest of 273 crore. I don't understand why this interest amount has come, because you do not get to see the interest burden, which is about 25-30 crore per quarter, but in this quarter they have provided for 273 crore. So that means there is an extra interest burden of about 250 crore. Even if I take the 9% increase in the sales, on a sequential basis, I agree that the PBT should have been little higher by about 50, 60, 70 crore against 2635 crore to maybe 2700 crore, including the taking the margin consideration. But I think this interest burden of additional 250 crore, and one has to understand that. In fact, I've gone through the presentation but couldn't go through quickly, but I have not been able to find the explanation whether this is one time of some finance charges which has all been incurred by the company in Q4. So if we exclude that, then probably you get a PAT of closer to about maybe 2100 crore, which meets the expectation. But yes, barring that, and then maybe on the royalty front, I have not been able to undertake the call that what has been the amount provided for or what has been the liability. So barring these two, I don't think that there is much disappointment on the number.
Okay, fair enough. Of course, we will get some more details. We're expecting Mr. Bhargava to address the press on those numbers in a while from now. But before we carry on, Sudarshan, your stock ideas for the last hour as well, please.
Well, it's all mid caps, and that's the way we should be. We are already inside the large caps using the index, the Nifty and the Nifty Bank. Now, a lot of mid caps are doing very well. They've been doing this for many weeks. So start with United Spirits. United Breweries and United Spirits, both in the same business, are outstanding performance. That should continue. So for this afternoon session, I suggest carrying United Spirits home, in the sense the share, obviously. Buy United Spirits and then keep it for the weekend. Next week, hopefully, you should see better gains. All right. Hexaware is the second selection. Mid-cap IT, we all understand that theme. That theme is intact and vibrant. So the themes are consumer durables, mid-cap IT representing Hexaware, and finally CESC. See, power companies are doing very badly, but surprisingly CESC is doing its own thing. It's broken out, making new highs and significantly outperforming the broad market also. So three mid-cap ideas, all for buying.
All for buying, and no need for that clarification, Sudarshan. That's okay. I mean, even if you want to carry the product and not the stock, I guess it's fine. But anyway, it's Friday as well, of course. Sudeep Bandyopadhyay is also with us. Sudeep, hi, good afternoon. Your thoughts on Axis Bank and the way that stock has rallied?
Well, Anuj, I think, the way the things are unfolding in Axis Bank, it's not very confidence-inspiring. They had this asset quality issue, which was kind of well known to the market. It's not that something new suddenly has hit. But of course, when a bank like Axis comes up with that kind of a quarterly loss, it's obviously alarms the investors and the market. And that's pretty much what is happening. We have been advising caution on both ICICI as well as Axis Bank. We did see a lot of buying coming in the Axis Bank after the Shikha Sharma cut short hard tenure, and people wanted to do some opportunistic buying, but we have been cautious. I think still a lot of time we have to wait. We have to see what the new leadership is, what happens to the asset quality issues, and how does the bank shape up or restructure itself. So I think these things are extremely important for Axis Bank. ICICI Bank even today I think has a stable leadership, whereas Axis Bank will have to find its new leadership. They have the asset quality issues. So we'll have to wait. We don't want to take a call on Axis Bank. Definitely it's not going to be bought by our investors.
Okay, this move on SRF is now getting big. In fact, for the last 2 days now, you've seen this move, especially in last hour of trade. And if you see the stock now, that's inching about 3.5% gains now. So, Sudarshan, any call on this stock technically?
You're talking about SRF?
SRF, yes.
Yes. See, now what happens, Anuj, is that once the market starts roaring now, a lot of stocks start looking technically good because they are breaking out, they are making new highs. That applies to SRF also. I do not think you want to carry it today, don't want to buy it. Okay. It can consolidate immediately next week.
Mr. Tulsian, I want to, discuss Axis Bank and what's happening to its peers with you as well. I mean, an 8% move. And I was just looking back in time. I mean, this term kitchen sinking quarter, analysts and we here in the media, we've been using this for, almost 2 years, depending on the several bad quarters that the bank has had. Do you think it's actually different this time around and, have things really turned a corner? And what's the advice on the stock? Mr. Tulsian?
Hello?
Yeah, now we can hear you, sir.
See, in the morning, I've expressed my reservations on many. I'm not trying to criticize the reports and all that, but I have not seen the downgrades or maybe the negative reports coming in except for maybe lowering the targets. I don't think that you have maybe, if I just want to give a simple reply, I may say that the counter is oversold. We have seen the stock correcting by 30-40 rupees in last 2, 3, 4 days, and now we are seeing the short covering, but that will be just a very loose answer. I don't think that that's the right way. In fact, the results are seen to be quite weak. You do not know that who new CEO will be coming in. You do not know that what will be the asset quality scenario. We have been hearing from the bank for last 4, 5, 6 quarters that probably this is an end of the asset quality pain. So I won't be taking this could be a big trap. In fact, we have seen that kind of things happening in the past also in few of the stocks that you see it behaving against the market fundamentals or maybe the results which have not been in any way giving comfort. So I won't be taking this call, and this could just be the strong hands, which are either going for, and maybe they will keep the counter alive for about maybe a week or so. And difficult to give a timeline, but this could be a big trap taking a fundamental call. If you want to move with the momentum, if you want to ride the momentum, that can be the choice of a trader. But as a fundamental analyst, I am not at all convinced with the financial performance and won't give a buy call on the stock.
Totally understand and respect that view, Mr. Tulsian. I just wanted your thoughts as well if you want to add in. Let's just pull up a 1-year chart of Axis Bank if we can. The problem is it's not, in fact, even a 2-year chart for that matter. I mean, it's not behaved like a leadership stock. I mean, it's been a great, it's a trader's, I think, bonanza if you get those trades right. But the kind of erratic moves that we've seen on this one.
And on that, I'll just say one thing. Just see what Axis Bank has done over a 10-year period and compare it to, say, an HDFC Bank or a Kotak Mahindra Bank or an IndusInd Bank.
Yeah.
The biggest wealth creators, Surabhi, are the lowest beta names. Sometimes, we forget that. The kind of compounding HDFC Bank has done or an IndusInd or Kotak has done without any kind of such volatility. Axis Bank is, as you said, a trader's favorite.
It's a trader's delight, exactly.
Yes. And on Axis Bank, a lot of times you see these huge volumes ahead of numbers and post numbers. So obviously this is one stock where you love to punt and do this. So the market is for everyone.
Absolutely.
You are allowed to do that. There's absolutely nothing wrong with that. But if an investor, and if you had all these stocks in your portfolio, the likes of Axis, and you compare them to the other names that I mentioned, or even say the likes of PNB.
Even a Yes Bank, I was going back into data, even on Yes Bank. So, 5 years ago, if you had, the share was worth 100 rupees back then. Now, if you're just for the split and everything, the value of that 100 is almost 1700, 1800 rupees. Yeah.
It came out with IPO at 45 rupees.
Yeah.
It's given 44 out of that as dividend, and the stock has rallied. Don't care about, what a lot of people say. The fact is the market's verdict is clear on some of these stocks. But anyway, let's do one thing. We'll take a break. Axis Bank remains our newsmaker. By the way, PC Jeweler is now down 15%. There's a temporary freeze which is on that stock right now. FNO stock, of course, so that happens. So 15% down on that. We'll take a break and analyze Axis's numbers. In the Shriram Transport's numbers look very disappointing. Net profit of only 144 crore versus pool of 372 crores. This is important because CV financing stocks have done well in general. You saw IndusInd's read through, that did well. After that, Cholamandalam came out with numbers. That was really spectacular. And based on that, a lot of people took positions in Shriram Transport. I don't know if there's any one-off. So I'll wait for my final judgment on this. But the first number is a profit of 144 crore versus a poll of 372.
So, Anuj, the thing is that Shriram Transport was, if I remember correctly, was also supposed to move to the 90-day recognition period. So there was an estimation that therefore the gross NPA numbers might look a little more troubled. No such problem expected with the disbursements. They've had phenomenal disbursements even in the previous quarter. But maybe it's because of the change in the NPA recognition norms that perhaps provisioning would have gone up. That's my best guesstimate right now before we actually get to the press release.
Okay, revenue is up 20% at 3,249 crore versus 2,712 crore. Ms. Tulsian, you want to take a look at the first glance of Shriram Transport?
See, it is only due to the high provision of 1366 crore against average of 550 crore in every quarter. So if you just add the 700 crore, the PBT, which is at 54 crore against 763 crore of Q3, gives you the answer. So it is definite that the provisions have spoiled this. Now whether it has happened due to the RBI norms meeting of 90 days or it's difficult to say. But because of the 1366 crore provisions having made in Q4 is seen to be the spoiler for the results.
So the PBT is in line with the estimate. It's the provisioning which has led to this bit of disappointment. So let's see how it reacts, of course.
Okay, so as we're waiting by for some more clarity on those numbers, maybe we can actually take that break. We'll then come back and analyze those numbers in greater detail and, of course, get you more on the markets. Okay, let's find out what is it that's caused this margin disappointment at Maruti. Mr. Bhargava.
So we managed double-digit growth. It's turned out to be 14.5. The total profit figure for the year, how much is it? 7,800. Where's the year figure? 7,722 crores, which is about 5% higher than last year. But one thing you must remember that compared to last year, the tax rates have gone up by about 3%. Instead of 26%, now we pay 29% tax. And there have been some unforeseen or exceptional items in this year which were not present last year. For example, this mark-to-market has had an adverse impact, which doesn't really affect because we hold the securities till maturity. But there's a lot of volatility in the quarter-to-quarter results because of the mark-to-market rule which has now come into operation. So that is something which we have to keep into account. We have also had, I think all of you are aware of this Manesar land issue which has been there for a long time. And that was finally got cleaned up, and that has had an impact of something like 250, 255 crores on the balance sheet, on the profit and loss account. So those are one-off items which have come into the picture this year. But if you leave that out, I think overall we have done better in all respects compared to last year. The market share has gone up to 50% from about 48 last year.
Plus 2.6%.
Plus 2.7%. Plus 2.7%. Market share has gone up. And in terms of cost impact this year, the material, the commodity costs I'm not talking of components, I'm talking of just the steel, aluminium, such things which we buy. That cost itself has gone up by 700 crores this year. And I think those are the main items. The royalty for the year has come down from 5. All the royalty was hit by the yen becoming much stronger, from 0.57 to a rupee to 0.61 to a rupee. Or the other way, 0.61 yen. So that has had an adverse impact in the last quarter. But overall, it's still 5.4% compared to 5.8% in the earlier period. In the last quarter, the employee cost has shown an increase, but that also requires a little explanation because the variable pay amount which we include each quarter in the results, in the cost, used to be 300 crores. In the last quarter, this went up to 400 crores because it was decided to increase the variable pay amount. And I think these are the two major items, isn't it?
Gratuity provision because of change of...
A small amount difference on the gratuity because of the gratuity provision has been changed from 10 lakhs to 20 lakhs. So that will mean another 30 crores provision for gratuity. So that's as far as the results of the year are concerned. Now the other things which I would just like to mention before you start asking questions, the dividend which we are proposing, subject to shareholders' approval, is 80 rupees per share against last year's 75. This would keep the dividend payout ratio more or less unchanged, slightly higher than last year, but just under 38%. And as you know, our scope of things is that dividend payout ratios should be under 40%. The board has approved in principle that as a part of our 35 years of partnership with Suzuki, we will set up two funds. One will be an employee welfare fund. This employee welfare fund will deal with matters relating to education, health, and infrastructure in housing colonies. Details have yet to be worked out, and the formal approval to the fund has to be obtained after the details. But in principle, the fund will be set up this year, and each year the fund will receive 1% of the net profit.
Okay, that was Maruti, but I tell you something, I'm now reading the press release by Shriram Transport Finance, and they're saying that if this was not a revision in the NPA recognition norms, their profit before tax would have been higher by 748 crores and net of tax by 489 crores. So 490 crores, they said, is the impact because of that provision. So if you were to add that back, I mean, I'm just trying to, work the numbers here. If you were to add 500 crores and 160 crores that they've declared as profit, in that case, the PBT is actually way ahead of estimates, Surabhi. It's this, revision in the NPA recognition norm that's led to this sort of, the absolute bottom line number. So there is, if you were to include this NPA recognition, that is, I think, a number which is looking quite interesting. Just pull out the intraday chart of Shriram Transport Finance. So the number is not as bad as you thought it is. In fact, if you were to adjust for that, the PBT is ahead of estimates because the numbers that they're giving is quite big. In fact, I think we had that flash as well. We should flash that on screen because that is the stock which is now moving after making the lows of the day.
I'm just calculating their growth in AUM as well, pretty healthy, 21%. That's what they've done in AUM, and that's slightly better than the run rate they were at in the third quarter. So that's gone along expected lines. The business is growing phenomenally well. That's what we can get from the first glance of the press release. It is just, and that was also anticipated. The fact that they're moving from 180 day to 90 days, something that the market kind of knew. So I guess as you're pointing out, once you net off that impact, then it seems, I mean, in terms of qualitative numbers, this looks like great growth as expected.
Exactly. So let's see. But for now, it's very volatile, of course, the stock. That is. Let's do one thing. We will take a break. Let's do that. Well, market's doing quite okay now. In fact, 138 points higher on the mid-cap index. So the advanced decline is not that great. On a day like today, you should have expected at least 2:1, but perhaps today is a day reserved for large caps. Almost a 370-point rally on the Bank Nifty is what we have at this point in time. Ronak Onkar now joins us, co-fund manager and head research at Parag Parikh Mutual Fund. Ronak, good afternoon. So you must be feeling rich, right? Overnight, you had this $80 billion jump in market cap of FANG stocks. You hold some of them.
Yeah. So we own Google and Facebook, the profitable FANG stocks.
Yeah. No, but I mean, your thoughts on the kind of re-rating that some of these stocks have gone through, Ronak? You are still in it for the long haul? Are you still adding to some of these positions?
So the idea is simple. So over here, the digital ad space is growing at a phenomenal rate, and both these companies and some other ad tech companies are beneficiaries of that trend. And these are longer term trends where advertisers are trying to find rational allocation of ad dollars based on the relative performance of each medium. Right now, people only have options in terms of physical medium like newspapers, TV, radio, but these are more targeted platforms for advertisement, and I think there is a need for that advertisement for product categories which advertisers are tapping into right now. So smaller businesses get access in a more democratized way to the same technology as bigger brands get.
Okay, pretty interesting. So you're keeping the faith on US tech. Ronak, the other interesting big holding for you, I remember us discussing this earlier, that you're not playing Maruti Suzuki through the Indian stock, you're playing it through the Japanese parent, and there you found a good valuation support. Maruti's numbers this time around, I mean, the street is a little unhappy, margin, disappointment, etc. Just your thoughts and, whether your approach to Suzuki Motor Corp remains intact irrespective.
Yeah, the idea was simple over here as well. Suzuki Motor Corp gets 2/3 of its profitability from the consolidation of Maruti India, and you also get royalties and other things that they get from the Indian company. At the same time, most of the assets that they are growing as a group are in the parent company, which is the Japanese company's books. And you get the other businesses practically for free, the two-wheeler business or other exposure to other geographies that Suzuki has. So I think it became interesting in terms of getting the same idea of Indian Maruti, but at a cheaper rate in some other listed market.
Okay. Yeah, but fair enough. I mean, the reason I'm asking is this, that right now, obviously, the stock is in news, and one can argue it's, of course, off its historic highs of that 10,000 mark. It's come off substantially. Bit of margin disappointment this time around. So would you treat that as just a minor one-quarter blip for a stock of the pedigree of Maruti?
We'll have to wait and watch, because if you're saying that just because one quarter's number are representative of a broader decline in the consumption of four-wheeler, I don't know that yet. So I think we'll have to wait and watch and see how the trend evolves.
Okay, some of your key holdings also include Axis and ICICI. Your thoughts on the way the market has reacted to Axis's numbers in particular, Ronak?
So Axis and ICICI both are relatively smaller positions in the private sector banks that we own. The bigger position is HDFC Bank. Market's reaction, I don't know why it has reacted in a particular way, but I think the interesting thing is that most of this cleaning that is happening right now in terms of loan books and the past mistakes, that probably is seen as a positive thing, because afterwards the expectations get reset. Now all we need to see is do the same mistakes repeat in the future or not. I think some of the governance aspects have to be taken care of or looked into in far more detail. I think that is the reason why people are reacting that way.
So does that mean that you aren't in a hurry to, let's say, increase your holding on an ICICI bank or any of the other corporate lenders?
I think we are comfortable right now with the way the portfolio is structured, with HDFC Bank being the bigger position and the other two banks are smaller parts of the portfolio, and mostly because of the retail franchise that these banks have built over the past couple of decades. And there are very strong brands, and I don't think that smaller portfolio allocation is a bad thing right now for these other banks.
Okay, fair point. Mid-cap IT, I see a couple of them in your portfolio. Persistent, which has also done well, and Emphasis. Of course, NIIT Tech has been in a different league altogether. But your thoughts on this re-rating that we have seen here?
So most of the businesses have been talking for the better part of the past couple of years about how digital business as a segment is growing. I think this particular financial year has seen a dramatic growth in that digital segment for many of these businesses, where they have realigned their sales channels, they have understood what kind of services they can provide, what niches they can occupy. I think most of the IT companies have seen, because they were incumbents in the existing client vendor list, they got the advantage of the incremental growth in many cases. The thing remains that we have to see if there is sustainable kind of a growth, or is it just a one-year blip where customers adjust their expectations.
I also see some interesting names on the pharma side in the fund. So what is the thought process here, and what would your sort of bent of mind be when it comes to individual pharma names?
So we've been tracking the pharma sector for a better part of the past 2.5 years, and from my personal understanding, I don't see a very clear-cut idea of which pharma company is going to do better, because most of the Indian pharma companies are in generic space, and each of them compete with other companies at the same playing in the level, the same footing. It's not like one company is better than the other in a substantial way. Of course, scales differ in companies. So what we have realized is, instead of having to predict that a single company will do very well, we thought of picking a basket of companies based on a certain set of traits, like a good balance sheet to take advantage of new products being available in the market, a very healthy pipeline in terms of their FDA approvals, and thirdly, ability to distribute and sell drugs in a variety of markets, not just US or Europe and India, but even other emerging markets. So we have seen, and of course, good quality management. So when we found these things together with a reasonable valuation, when they were hit by the FDA problems, we thought, okay, this is a good opportunity to get in and see how this pharma basket evolves over a period of time.
You have some part of your portfolio also in hotel stocks. Ronak, this is not a new story, right? All of a sudden, why is the market getting so excited? I know there was a Lemon Tree IPO which did really well after listing, but I mean, your thoughts on the space?
So we only have Mahindra Holidays, which is not a pure play hotel kind of a business. It's a very different kind of a business model. It's in travel industry for sure. But I think hotel has seen a huge capital infusion over the past, in the past 10 years ago. And over that, nothing has come up now. So of course, the yields on the rooms that are available, the profitability on the existing rooms, and many hotel players have not done well over a very long period of time. I think it's a cyclical adjustment, and these companies are doing well because of the lack of new capacity coming up.
Ronak, when I looked at the top key holdings list and the pattern, I didn't find almost any consumption stock on that list. Is that simply because of the valuations? You don't want to buy too expensive?
Valuations definitely are a bit concerning, because when we see the kind of growth, so if you contrast, just for a hypothetical case, if you contrast the growth of companies like Google, Facebook, and if you contrast the really giant consumer companies in India, of course they're not comparable businesses, but the point is, how much do you pay for how much growth that you get in these companies? So valuation is definitely a primary concern. On the other hand, we do have one consumer stock in the portfolio, which is Zydus Wellness. It's a very interesting category, which is a market leader in the artificial sweetener category. I think it's a market where, if India is becoming the diabetic capital of the world, it has a great chance that this company can do better with better marketing and distribution.
All right, Ronak, it was good talking to you. Thanks a lot for dropping in today and having that chat. By the way, just want to point out that this move that you are seeing on PSU banks is now approaching the high point for a couple of them, Andhra Bank in particular, but in a couple of others you have seen some profit taking as well. So Bank of India and Canara Bank, for example. So it's been quite interesting. But the big move has happened intraday on Shriram Transport Finance. I'm still trying to understand what's happening here, but the management commentary looked a bit positive, Abhishek, considering that if you were to take into account that provisioning norm?
Well, Anuj, as you rightly mentioned, they are transiting to 90 days past due recognition from 120 days past due recognition in Q4. So the overall asset quality picture looks far stable than what analysts on street were anticipating. The gross NPA in absolute value has increased to 22%, while in percentage-wise, while the gross NPA was seen anywhere between 9.4 to 9.5%, has come in at 9.15%. What I understand from management is that they have taken all the transition hit in terms of provision from their P&L itself, and that is why if you look at the provision coverage ratio is at 71.11% against 71.04% on a sequential basis. It's heartening to see that the disbursement is at all-time high at about 15,122 crores. This is largely driven by new CV disbursement, which grew by 29.3% on a sequential basis. CV sales have been strong in the current quarter, and their AUM growth at 21% is the highest in last 4 to 5 years. That is why you saw a sharp rebound in the stock as and when, you know, there were more clarification in terms of growth that happened. Back to you.
Okay, no, but what are the analysts saying if you have spoken to anyone?
Not spoken to any analyst, but if you look at the numbers, as I mentioned, analysts were expecting a gross NPA 9.4 to 9.5%, but that has come in at 9.15%. Even if you look at the AUM growth, many analysts were anticipating it to be in the region of 15 to 18%. That has come in at 21%. And remember that this disbursement of 15,000 crore is at all-time high quarterly disbursement for Shriram Transport.
Okay, Abhishek, thanks a lot for that. That explains the reason, the stock has recovered. I mean, it's still in the red, but it's recovered most of the lost ground because, as Abhishek was also pointing out, the other numbers look good. Disbursement at all-time high. It's that provisioning norm, but ultimately, that's hit the net profit, so that's why it's down.